Good morning, good morning, good morning. I hope that everyone is doing well. Welcome to the 100 Black Men in Las Vegas Junior Investment Club meeting number 8. We're going to start with a roll call. Please say here or present when you hear your name being called, and we're going to get right into class. Let's start with, let's see, Ace Coleman, Adonis Shelby King, Aaron Sparrows, Elena Lundy,
Here.
Alexander Robinson, Alexander Artiga.
Here. Oh, sorry. Alexander Robinson's here.
Robinson's here. Okay, great. Alexander Artigua, Elia Hibbler, Aiden Hibbler,
Here.
both Hibblers.
Here.
Okay. Elia and Aiden are here. Fantastic. Amari Lopez,
Here, ma'am.
Amelia Flanagan, Antonio Merriman, Eris Douglas, Isaiah Gillespie, Braden Stevenson,
You.
Braden Bailey, Caitlin Harry,
Here.
McCoy Harris,
Here.
Christopher Collins, Christopher Daniels, Clinton Chuck, Dakota Ruffin, Dante Ford, Diora Davis, Elijah Glover, Ethan Glover, Emmanuel Ojara,
Here.
Gage Flanagan, Evelyn Harris, Henry Perkins, Innocence Bell, Isaiah Brazini, Itzel Chavez, Jackson Velasquez,
Here.
Jaden,
Here.
who just said
Jackson.
Jackson? Okay.
Jackson.
Jaden Pierce, Jaden Linares, Jordan Carson, Josiah Peace, Joshua Peace,
Here.
Julian Lundy,
Here.
Journey Bell, Kalani Allen,
Here.
Kalina Stevenson,
Here.
Kristen Duffy,
Here.
Lamira Jackson Major, Lamar Abrams Major,
It's Lamore.
Lamore, I apologize. Lathan King DePriest, Lauren Bart Playing,
Here.
Layla Goolsby,
Here.
London Wilson, London Roper,
Here.
Macon Meekins, Malachi Snyder, Milan Waller, Nasir Thompson, Nathan Dillard, Noah Sessions, Nazir Wright,
Here.
Pharaoh Washington,
Here.
Robert Jones, Ross Graydon,
Here.
Sarah Dom Frampton, Serenity Brody, Yali Ortale,
Here.
Yulana Lundy, Luna, Yulana Looney, Zaire Roberson, Zaire Davis.
Here. Zaire Roberson here.
Okay, Zaire Davis, and Zev Heger. Did anyone not hear their name being called this morning?
Did you call my name?
Yes, I did. Etzo Chavez. You're here, fantastic. Anyone else miss hearing their name?
Christopher Daniels is here.
Christopher Daniels is here. Okay, fantastic. Anyone else? All right, Mr. Patrick, take it away.
All right, good morning, everyone. Happy Saturday. Thanks for jumping on, getting up, and turning on those cameras when available. Please turn on your cameras. Let's make sure that we are being interactive as much as possible today because we came to get something out of this, right? So going to do three things before we go into groups. Number one, obviously, we're going to talk about where the market closed today or yesterday, right? I want to look at a couple different stocks and kind of talk through things you should be doing to help you analyze stocks that you may want to purchase that fall within your risk tolerance. And we're going to also watch a video on bonds and that type of allocation of what bonds are, okay? So let me just do this real quick here. So number one, and like I said, I'm going to ask every week, all right? So be prepared. Yeah, yell the answer out. Don't make me come after you. What did the Dow close at on Friday?
44,546.08.
Awesome. Thank you so much. Great answer. All right. What did the S&P 500 close at? London, I see a hand up.
It ended at 6,114.63.
Awesome. And the NASDAQ, what did the NASDAQ close at? Layla.
I know that it closed at 20,026.77.
I love it. Thank you. See, I didn't have to come after anybody. Everyone is drinking the Kool-Aid. Everybody is happy to be here. I love it. Thanks so much. All right. So, right, the market closed kind of mixed. The Dow is typically the big indicator, closed down, right? The S&P 500, which is a bigger mix of stocks, right? Closed slightly down as well. The NASDAQ, which is typically all your tech type of companies, your AI, your NVIDIAs, your Microsoft, and so on, that closed up slightly, okay, as well. So make sure you know where they close because that's going to give you, once again, a good indicator of where your stocks are falling, okay? Let me go ahead and just kind of share my screen right now because I wanted to kind of just continue to give you all some additional tidbits. Then we're going to watch a video. But let's just go into Yahoo Finance. All right, so I'm in Yahoo Finance. Everyone can see my screen. Thank you. All right, so once again, you can go into markets. You can see where everything kind of falls. Okay, you don't have to use Yahoo. You can use Google Finance. You can use Bloomberg. There's a lot of different sites out there. Okay, as well. Now let's see what sectors are doing really well so far for the year. Okay, so once again, you can see all these overall sectors are slightly up for the year, right? With basic materials and communication services still leading the way. Okay, and once again, like I said before in previous weeks, if you wanted to, you can click on that. You can then see where are the real gainers, right? So once again, you can see telecom services is really the big gainer here. That's up about year to date around 8.2%. So what are telecom services? So if you click on that again, boom, that's going to take us more into all those different companies that are in the telecom sector. Okay. So here we are. And here's another cool thing, like we talked about before with analyst ratings, right? If I'm not really watching this particular stock, if I'm not really studying it as much as I should, there are actual analysts out there that's their job. Their job is to go in, review the stock, review the company, make sure that they have a good understanding of it and that they can then come out with their rationale as to say if it should be a buy, meaning they're recommending that you should buy it or they're recommending that you should hold it. On everything. So you can see the average analyst rating on this particular stock is a buy, right? Doesn't mean that it's going to continue to go up, but they do have good sentiment there. They seem to be that they are running their company properly, right? And so if you're running your company properly and actually following through with your promises of running an efficient company, a profitable company, then typically you end up with the stock price going up, meaning more people will want to buy your stock. Okay. You can see here on this particular stock, they have a hold rating, right? Who remembers what a hold rating means from an analyst? Don't blurt out the answer all at once, everyone. Ross. Ross in the clutch. What does the hold rating mean? All right. All right, let's keep moving. Hold rating means that if you already own it, then just hold what you have, right? It's exactly the meaning so just hold what you have potentially. Don't technically buy more. They're not saying to sell it either, right? Just hold it. Right now, it may be going through a slight rough patch. There may be some bad news coming out about a company or so on. But at the end of the day, they're just saying hold on to it right now. Don't really sell it. And then the last rating, which we don't see here, which would be typically sell, right? But this has been a strong sector. So more than likely, you wouldn't really see a sell rating in this particular sector, okay? Now, if we other company here. So if we go here, oops, I don't want to do that. Now let's go into, let's just find a company to look at, okay? So let me see here. Here we go. That's what I typed in the first time. I don't know, whatever. All right, let's just look at a company, okay? All right, so once again, this is also in the tech sector. You can see what's going on with the charts on this particular stock, right? And this is how you really want to know and how to read, right, what's going on with a company. So as you can see, the previous close, so that means Thursday's close at 42, or close, excuse me, at $42.28 on Friday. It opened up slightly higher than that, $42.93, and it dropped down a little bit that day, right, throughout the day. The bid and the ask, that's for the traders on the floor as well. That's what they sell it at. That's what they're going to be buying. That's what they're going to be buying it at. Okay. The day range, as you can see. So for that day, the stock fluctuated between $42 and $48. All right. So good amount of swing there. The 52-week range, that means over 52 weeks, the stock went from $17 up to $122. So in that time, it's fluctuated that much, right? So there was some big drop off, either news, earnings, things like that, as to why it probably dropped from 122. Okay, volume. As you can see, there's a lot of good volume. There's a lot of volume in this particular stock. All right. Average volume on a day, 74 million shares trade on an average basis for this particular stock. Market cap, 28 billion, right? So this is definitely a good sized company. Beta, the beta for this particular company, once again, is above 1. Remember I talked about before where if the beta is up above 1, you're going to get much more fluctuation in the price. Okay, so there's a little bit more volatility there as well. We've got earnings per share. We'll talk about that more. Dividends. This company is fairly a new company, so they're probably not paying that much dividends. And we'll talk more about that, what that means. But let's just kind of look at where they are from an analyst standpoint. So you can come here, analysts, and then you can kind of come over here and see. So they missed earnings back in 2024. So you remember when the stock price was the high was 122 on that stock? They probably got punished for missing earnings, right? Q3, the estimate they're gonna come out with earnings pretty soon here on what they're doing. Now, as you can see, there's a good amount of analysts out there that are recommending that this is a buy on this particular stock. Okay, you can see the revenue estimates. You can learn a lot about this particular company as well. Okay, so wanted to just show you that these are the things you can kind of look at, but mainly, you know, once again, if you're comparing two companies that are in the same sector, what you really should be able to do then at that particular point is, what are the analysts saying? What are the analysts saying? Are the analysts saying on this stock to buy? Are the analysts saying on this stock to hold? Maybe go with the one that they're saying to buy, right? So you want to make sure you come in and don't just pick a stock and just buy it. Come in and look at the fundamentals of the company. Come in and look at the what analysts are saying about the company. What are their target prices for the particular company, and then that'll give you a good indication of if you should buy it over another stock in the same category. All right. Any questions? All right. And once again, you can do that with any company you're looking for. Either you type in the ticker symbol or you type in the company name. All right. All right. Let's go ahead and jump into our video for today. Last week we talked about market analysis. Today we're going to look at asset allocation and bonds and beyond. Okay.
Asset allocation, bonds and beyond. In this video, we're going to learn about asset allocation, asset class, wealth preservation, bonds, coupon rates, face and par value, and maturity date. Asset allocation is an investment strategy that balances risk and reward by spreading your investment across asset classes based on your financial goals, risk tolerance, and time horizon. Asset allocation prioritizes the overall portfolio instead of individual investments and aims to minimize volatility and maximize return to help you meet your long-term financial goals. So what is an asset class? An asset class is a group of investments that share similar characteristics, are subject to the same regulations, and often behave the same in the market. The most well-known asset classes are stocks, bonds, and cash, all of which are available in SMG. Other asset classes include real estate, commodities, currencies, futures, and options. Investing in different asset classes and adjusting your asset allocation as you get older and your circumstances change is an effective way to preserve your wealth, meaning safeguard your money for the long term. While building or growing wealth focuses on investment returns, preserving wealth focuses on allocating your investments into assets like bonds to protect your money against factors like inflation and market fluctuations. This is especially important when you experience life changes, such as buying a house or starting a family. It is also important as you get older and closer to retirement. Wealth preservation allows you to afford your future lifestyle with potentially lower or no income. Bonds are one of the main asset classes used most often in asset allocation and wealth preservation. Bond coupons provide a predictable cash flow of interest payments that add to portfolio returns, and bonds as an asset class typically perform well when other asset class prices are falling. Companies and federal, state, and local governments issue bonds to raise money, finance new projects, maintain operations, or refinance debt. A bond is a loan made by an issuer or borrower to a lender or an investor. The issued loan amount is called the face or par value. The issuer pays a coupon or interest payments on the face or par value to the investor. The coupon rate or interest rate on the bond determines the amount of the coupon payment. Most bonds are issued in $100 or $1,000 increments and mature at face par value. Issuers pay coupons to the investor until the bond matures, reaches its end date, and the face par value is paid back in full. The maturity date is the day the bond issuer must pay the bond's face par value back to the lender. On maturity, there are no more coupon payments left and the bond ceases to exist. There are 3 types of bonds you can invest in the stock market game. Corporate bonds are issued by companies. Municipal bonds are issued by state and municipalities, towns or cities, and government bonds are issued by the U.S. Treasury. Corporate bonds typically have a face value of $1,000, municipal bonds $5,000, and most government bonds $10,000. The actual market price of a bond may be different than its face value. Bond prices, like stock prices, depend on factors including the overall performance of bonds as an asset class in the current marketplace, the credit quality of the issuer, the length of time until maturity, and the bond's coupon rate compared to the current market interest rates. Generally, if a bond's coupon rate is higher than current market interest rates, its price will be higher than the face value and vice versa. Check out the Entering Bond Trades video for some bond research tips and step-by-step instructions on how to enter a bond trade in SMG. But before you dive into entering bond trades, here are some questions to consider when researching bonds. For corporate bonds, do the companies in your portfolio also offer bonds? Why do you think the company is selling both stocks and bonds? And why would it be beneficial to own one or the other or both? Municipal bonds. Find your hometown in the SMG municipal bond list and research why your town is raising money in the bond market. If you can't find your hometown, search for nearby towns. Government or Treasury bonds. Why do you think governments borrow money? What have U.S. Treasury bonds paid for throughout history? What is the U.S. Treasury using bonds to pay for today? Thanks for watching. Entering bond trades.
All right, let's talk about this a little bit and before we go over to the groups. So bonds, right? So you've got stocks, you've got bonds, you got real estate, you've got cash. Stocks are not the only investment, okay? So don't think that's the only way you can ever preserve your money, make your money grow, or so on. There's a lot of different things. Yes, the purposes of the game and that we're playing and learning a little bit more and having these paper trading accounts. It's great. You got stocks. It's fun. It's moving up and down. You're losing money. You're making money. It's a good experience. But at the end of the day, there's other investments out there. There's annuities. There's insurance. There like I said, real estate. And so we just talked about bonds. And so a bond. So who remembers what a bond is? Okay. It's a simple definition. Who can help me out? We just watched the video. A bond. Come on. A bond. What is a bond? If I loan you money, I'm basically issuing you a bond, okay? That's what a bond is. A bond is a loan. A bond is a loan, okay? So the government issues bonds. Your local municipality, meaning Clark County, okay? Las Vegas, Nevada, they issue bonds. And then the companies that you buy, so the stocks that you buy, they issue bonds as well, okay? Now, depending on the type of bond that there is, depends on what type of company it is, what credit quality. So they mention credit quality when you're talking about bonds, okay? And it kind of is a stack rank, meaning that U.S. government bonds are typically the safest way to go. Meaning borrowing money from the government is typically the safest way to borrow or to loan, safest person to loan money to, okay? You don't have to run off looking for the government. They will find you, okay? So it's not like you need to, they will find you. So you loan money to the government, 9 times out of 10 or 10 times out of 10, they're going to pay you back. So you basically, when you buy a bond, you're loaning money to the government. In return, they're going to pay you interest over time on that bond, on that loan. At the end of that term, you'll get your full face value back. So the money that you loaned them, and in between that time, because you loaned them the money, they're paying you interest, right? Or making payments back to you on that loan. Okay. So that's government bonds. Governments might issue bonds to fund a war, fund the military, fund the overall economy. Okay. Then you'll have municipal bonds. So those are local, like your local counties, your local government, Clark County, Nevada. They might issue municipal bonds. Okay. Municipal bonds, they may pay a little bit more because there's more risk. So they're going to pay you a little bit higher interest rate than a government bond, because a government bond is very, very safe. So a municipal bond is going to pay a little bit more interest because they need to attract you because it's a little bit more riskier, right? It has a little bit more risk. So no, they'll issue those bonds either to fund a new road in the county, maybe to build new schools in the county, and or to help with the overall infrastructure of that county or that municipality. Okay, that's why they're issuing those bonds. And once again, like I said, there's a little bit more risk because over time there has been counties that have defaulted on their debt, right? And then the U.S. government has to kind of come in and bail them out. So if you look things up, like I won't go into certain counties, but there's certain counties that unfortunately have defaulted on their debt within the U.S. Then you have corporate bonds. Okay, corporate bonds are bonds that are issued by Coca-Cola, by AT&T, by Microsoft. Okay, why are these companies issuing bonds? Okay, once again, that's another way other than selling stock for them to raise funds to either expand the business, build new facilities, right? Buy more equipment. They may do that. So now with the corporate bond, excuse me, they're much more riskier, right? Because at the end of the day, they're not backed by the government. They're backed by the stockholders and the fact of how they run that business in order to be able to pay you back. So they're going to pay the most interest because there's more risk. All right. And then each company is going to have a credit quality. The highest credit rating for a corporate or any type of bond is AAA. Okay. And then the lower the credit quality, those are going to be called either junk bonds. But corporate bonds can have AAA, triple B, triple C. Those are some of the ratings that are out there on bonds, okay? If you're ever looking at bonds. But it is a good way over time to be able to use those to diversify your portfolio. Typically what happens is if the stock market is doing great, bonds are not doing great, all right? Maybe they're doing okay. All right. They're not knocking anything out of the park. If the stock market is doing horrible, bonds are going to do a little bit better, right? Once again, they're not going to knock it out of the park. They're not going to get a 15% return, 20% return for a bond, but what they do offer is good stabilization for your overall portfolio, okay? So they may give you a good 5% return, 3% return, 4% return, something to definitely make sure you offset inflation. Because at the end of the day, if you're just sitting in cash, you're losing money because of the fact that inflation is always going to go up. Okay. What is inflation? If you go to the grocery store, right? Or your parents go to the gas station to buy gas. When I was younger, you could get a gallon of gas for 99 cents. All right. Loris, what are gas prices now? Right? Gas prices are what, $3, $4, sometimes $5.
Yeah,
And,
or $3, $4 around there.
okay. My car is electric, so I'm not buying gas right now, but we have another gas car, right? So gas prices are going up. Eggs, right? Inflation, eggs. I mean, eggs are like, oh, geez, I'm gonna have to stop my eating eggs because the eggs are expensive. All right. I mean, I remember when eggs were like, I mean, maybe $1 or two. So now you can see that's inflation on that part of it. So just wanted to go over that with you all. So we want to get ready to start going into our groups, but any questions? All right, Miss Rhonda, if you want to get us ready to go into groups, while we're doing that or getting that together, let me just show you
Actually,
one.
we're all set. If I hit the button, they're going to be in their rooms in 30 seconds.
Bam, let's do it.
All right, here we go. Amanda C. Zoom, Amanda C. What is your child's name, Amanda C? Amanda C. Amanda C. What is your child's name? Aiden, you need to go into your room. Aiden, you need to go into your room. You're in room 2, Aiden. Everybody should be in their room. Hi, Loris. How you doing today? Oh, let me put you over. Let me put you in the adult room. Hold on, Loris.
Okay.
Me too.
Who said that?
Aftermath.
I'm sorry, who's over? Okay, let me put you over there. Let's see here.
Mm-hmm.
Okay.
All right. Join.
Ace Coleman, you're a little late today.
Yeah, sorry. It wouldn't let me join the Zoom because it said that the person that made it hadn't started it yet.
Okay, I'm going to put you in your room so you can get with your teammates.
Okay, thank you.
You're welcome.
How do I go to my room?
Amanda, I was looking for you. So what is your real name, Amanda?
I'm Jackson. I'm Amanda's son.
Oh, you're Jackson. Okay, you're Jackson. Okay, Jackson. I'm sorry. I was asking earlier whose child what was the name on Amanda, and so it was you. Okay, so let me what group were you in, Jackson, the last time you were here?
I don't really know. I haven't been here in like a week.
You just got here. Okay, no problem. Okay, so I'm gonna put you in a new group. You introduce yourself to the team and tell them that you're new to the team, okay?
Okay.
All right, I'm gonna put you over there now. Aiden Hibbler. Aiden Hibbler. Aiden Hibbler, you should be in group 2. Aiden Hibbler, you should be in group 2. Why are you not there? Aiden Hibbler, you should be in group 2. You should be with your group. You are not where you're supposed to be. Aiden Hibbler, you should be in group 2. Please join your group. Aiden Hibbler.
Hello, Miss Rhonda. Do you know who Kelani, I think Kelani Hallen is?
Yes, she is a first year college student. Was she in the class in your group?
Yeah, but I kept talking for 10 minutes straight and she said nothing.
Did you ask her a question?
Yeah, I was
She
talking
was
with you. No, yeah,
okay,
nothing.
so you were talking and she wasn't saying anything. Okay, I'll
Yeah.
find out what she was doing.
Okay, thank you.
Okay.
Hey, hey, Rhonda, right, well, everybody's coming back. For Joshua and Nazir team, they're not they're not able to log in, or they seem like they have the wrong login. But
So
I'll
so
text you, or
so the Joshua and and Nazir, right? They don't have the proper login
Yes.
to make a trade.
correct.
Okay. So I will send that whole group. I'll resend the email with the login information for their team.
Perfect. Thank
Okay.
you.
Thank
All right, we'll give it a minute here to make sure everybody gets back into the room. We'll kind of do some wrapping up.
Mr. Richards, did you review the list of competitors this week?
No, I didn't have time to do that like I wanted to. So
I think we
we'll
have
probably,
one group in the top 50.
yeah, it's
I,
my group.
oh, that's your group?
No,
Okay.
well, no, we're 19. So
Okay.
um, I'm just letting you know. I'm just talking junk, y'all. You know, if y'all ready, come with it. Let's go. Let's go, everybody. All right.
Excuse
Um,
me.
yes.
I emailed Ms. Rhonda our group name. Did you get it?
I did. Thank you.
Okay.
All right, so next week we'll start off. They typically send out the rankings midweek. We'll start looking at those just so everyone can kind of see that. But I'll also show you where you can see your particular ranking. Well, we got, actually we got like a couple minutes, so let me just do that real quick. That way we got time next week. Make sure it's still there. Okay, good. You all can hear me?
Yep.
Okay, cool. Share this. All right. You all can see my screen. Thumbs up. All right. So this is login. So just to show you real quick, I'm not going to show like what we bought or things like that because I want you all to make your own decisions, right? So this is how you can see where what the ranking are or what rank you are at. Okay. Total equity, that shows how much money is available or earned, right? Total net equity gain. So far, the portfolio has made $3,484.21. So I'm up 3.4%. Buying power, that's kind of like on more of a margin situation. Really, if you go over the 100,000, so if you spend 110,000, you're buying on margin, so you're buying on interest, and so that's a whole nother different type of trading. We're not really going into that, so I would just say try to make sure you stay at or below 100,000 on your purchases. Okay. Cash balance. So right now I've got $5,669 left in cash that I could use. I'm probably going to sell some stuff that isn't really doing what I wanted to do. But so as you can see, this is kind of the roller coaster I've been on, or we've been on since we began. So I put some money to work. It went down. It went up, it went way down again, and then we went back up. Okay, so I made some moves. Things weren't doing what I wanted them to do. They might be great stocks and things like that, but wanted to make some changes. Okay, on that. Once again, entering trades. That's where you would go and so on. But we'll talk about that further at another time. But got a minute. Do we have any questions? Okay, no. Well, once again, thank you all for getting up today, getting into your groups, interacting with your groups. Make sure you do your research. Make sure you look at those different sectors in Yahoo. That'll give you some great ideas as well. All right. So with that, I will go ahead and close it out. I will see you all next week and have a great weekend.
Okay, see everybody next week. Bye-bye.
Bye.
Bye. Thank you.
You're welcome.